Good afternoon, traders. This is Christian Farmer at Starbuck Trade Group, and this is your end of day market recap for Tuesday, May 23rd. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving any advice or recommendations. Please read the full risk disclaimer there. So, theme of the day. Well, quite a different day as the day unfolded from morning to midday to afternoon. But theme of the day is we got a reversal day. A lot of things reversed. A lot of things kind of started the day as they were towards the end of yesterday, in terms of high growth, names with high short interest, squeezing. Carvana had that going on today in the morning, and it was a little bit of continuation, but right around, I would say a little bit less than midday, things kind of reversed and started to kind of break apart as the day unfolded, and volatility kind of crept in, and you had a reversal day. So one of the things before we go through the price action, because there will be some interesting things to kind of go over in this video, but keep in mind that we were overbought. This is something that I put out the last 2 days in my Substack, as I tweet about the indices, or not tweet, but I write about the indices first, and then I talk about some single names. But I noted that yesterday the RSI for the Qs, right, which kind of just measures momentum and so forth. And when these indices get to around that 70 level or push above 70 level, that is overbought. So you have to be a little bit careful with that when we do get overbought. Now, the other way that you can kind of look at that, of course, is it's not bad. It's not a bad thing to see buyers come into this market and want to be involved in that area of the market. That's not a particularly bad thing. You just have to be mindful when things get overbought, and that's basically what happened today. And the Qs have been going up like in a really nice trajectory, over the last month. So where are we? Year to date, the Qs are up 25%. Month to date, they're up, they tacked on another 3.4%. So, I mean, that's great performance. But, sometimes you need a reversal day, or just a little bit of, I don't want to say reality, but just an understanding that the market doesn't go up in a straight line, that it can go down. And that's kind of difficult sometimes too, because, as traders, we're for me, a lot of times I'm pressing, right? I'm going to stick with the trend as long as I see it a trend. And then you just have to be aware when it reverses, right? And then when things kind of start moving to the other side, and that day is usually can be a little bit painful. It is usually for me when we do have a reversal day, because I'm always, I always have trades on, when the market is acting very well, and it has been, obviously not every area of the market, because the breadth has not been perfect. I think everybody knows that at this point, but there's been a lot of good opportunities in this market. So the main thing, and I'm kind of getting to the conclusion of this video already, but I'll come back to that. But I think just overall patience, and just the overall understanding too, that you are going to get reversal days from time to time, right? That's just part of the market, right? And that's just part of how it is. So again, I'll come back to it. I'll kind of reiterate that. But where are we in terms of the S&P? Well, we're right back into the value area. So yes, that broadening formation that I had drawn on my charts, sure enough, that capped the price action in the S&P just a couple days ago. I think that was Friday's price action where we actually touch this. But yes, this, we did fizzle out here, right? And we're back inside the value area. Now, I think of the meme of, I think it's Animal House, like, all is not lost. Watch the 20-day moving average. We did lose the 5-day moving average, but yeah, I mean, I don't really see anything majorly bearish here. It's just very sideways, right? And we're back into the sideways range. I would watch this 41.73, right? Right now, S&P futures are 41.58.5. I think that's where they closed for now. We'll see if that kind of, if price stays inside the value area, then we've got more of the chop. Could we go all the way to the other side of this? I mean, anything is possible, but we're going to have some probably some demand areas that will line up, just as in here, the 20-day moving average and the bottom of value. So that's something to keep in mind. Also, what was Notable for the day is we broke into, I always mention support levels, right? What to kind of watch. And if we don't hold the support levels, then you need to kind of plan differently, right? I was talking about that with Joel from Benzinga at the close. I'm on Benzinga every Tuesday for his closing print show. And we just talk about what support and resistance levels are for, right? It's not a place like, for example, when price comes down to support, it's not a place to go all in. Now, certainly you can try a trade, but what you want to see is some confirmation that that support is holding, right? I think Brian Shannon talks about that a lot. He uses obviously like anchor VWAPs and those types of things. But when price gets down to a support area, you want to watch for a bounce, right? You want to watch for confirmation that that is a good support level. And if the support level doesn't hold, then you have to re-examine your approach and what you've been doing or what your trade is for the time being. That's it. In terms of support resistance, they're not magic. They are significant, and that's why we pay attention to them. So that's the S&P. I mentioned the Qs a lot. Yes, this has been a really impressive month, really nice breakout in a, market where the Fed has been tightening, where there's debt situation, ceiling talks every single day, probably will go down to the wire. We've got some other things going on with interest rates moving up too. And, look at how extended at this point the 5-day is above the 20. So the reason why I say this now is because price closed below the 5-day moving average. So this is probably due for a little bit of a breather. I don't know if it comes all the way down into the 20-day moving average, but this is a nice area to be taking profits. Notice that we left this VPOC up here, 341.09, right? That could be something that gets taken out at some point, during the year, right? Another thing to watch, considering it's only Tuesday, but we'll see if the Qs can maintain and stay above this 332 level 31. That's something that I'm interested in because, again, it's a significant level to watch for this year. One more chart here. Again, we look at multiple time frame analysis, but and again, I like to look at the picture. I like to look at these pictures differently, rather than some people like to look at them all on one screen, and you can do that with the market webs. But I like to actually go through each time frame and kind of associate what's going on here and where we could fall down to. So same thing for the S&P. The 80% rule is now triggered, right? Which means that we've broken into the value area, and we've done that for the week. And 336 was your support level. That will now be your resistance. Now, probably, this usually acts as some support. That's the 200 period moving average. You could see, and I just zoomed out here so that you could see how this has acted previously when we've come in and tested. Like, notice a couple weeks back, we came in and tested here and we held pretty nicely and just continued to go higher. But yes, another thing to note here is that on this last peak, right, which was, I guess, yesterday, notice that the RSI did not, it's a little bit of a bearish divergence. The RSI made a lower high. So again, it could be that this is due, we're now in maybe a little bit of digestion zone, maybe in a little bit of a pullback area. IWM, which again, IWM closed down 0.5%. Very, very tricky, this IWM is. It was up quite nicely in the beginning of the day, but this has a pattern that with IWM, it's had difficulties closing, either on the highs. And, this was something that we went over in yesterday's video, this 179.10 level, right? We could not get through that. We also touched the 200-day moving average and a rejection there. So, you'll probably, I think that's the word of the day, is probably rejection or reversal, because we got a lot of those, right? I spent a lot of time talking about the IWO, right, which is the growth, small cap growth. Same thing. This tried to reach higher, and again, it got brought down. Now, again, this may come back into play, and it hadn't, it hasn't even lost its 5-day moving average. So that'll be something that I'll be watching tomorrow too. Also, the ARC, we kind of saw like a little bit of a handoff from the mega growth to the ARC type areas of the market, but this had a reversal too, and the ARC ETF finished down 2%, right after, I mean, that's a pretty decent reversal. after it went all the way up to about 41 bucks. So again, not an easy trading environment when things move like this. So, what caused this, flip today? Was it the debt situation? Was it something else? I mean, it could have been a number of things. We're also hearing about how that there's like a new COVID strain going on in China. I don't know too much about that yet. I haven't really gotten that much information about it, but that's also out there. But notice this was around 11:30, and I thought that this was interesting. This is something that we were talking about a little bit in the room today, but notice the time of this, right? This is at 11:33. Right. So right around the peak of this, this is kind of telling a little bit. This was the just 21-day T-bill reached 6.2%. So, that's pretty significant, right? That's a pretty big, knee-jerk effect, moving higher. Like I was in one of the last auctions because I have T-bills I've been investing using Treasury Direct, and I roll the T-bills, and I've got some for 30 days and I've got some for longer. I've got different maturities so that I'm kind of like laddering that portfolio. But I got the other, towards the end of last week, I think I got 5.4%. And I was like, wow, that's really impressive. And I think it was either 5.4 or 5.6. I'm going from memory, but it's the highest rate that I've gotten in years for something like that. So, it does make you think, right? And if you're looking at growth names and so forth, and you've got a short-term rate that you can get 5 points, forget about 4%, which is still pretty good. But that rate is very high. And of course, when I'm looking at interest rates, I usually look at the long end of the curve, right, which is the 30-year bond futures, but they have not been moving at the same trajectory, right? We talked about this head and shoulders pattern and a break of this, and 125.22, right, could be where this is headed, but we may not get there in a straight line. But yes, I mean, the yields are really going up, across the board. And somebody asked me about this, and this was a great question on Twitter. They said, well, isn't that usually, or isn't that bad for growth stocks? And my response was, yes, usually it is, but it's one of many factors in this market, right? Because if you would have had that thought, you really have to kind of, I see this analysis that happens all the time on Twitter where people take one factor and they say, this is it. This is going to, usually this is going to cause the market to crash and da, 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 da. But you have to kind of take a lot of these factors, interest rates, the dollar, right? What the price action is doing, right? And they can kind of help you formulate, an overall viewpoint. Not just making the conclusion like, hey, the market's going to crash or the market's going to go up, right? You kind of have to know like, hey, this is a tailwind, right? This is a headwind, right? Rather than, going to that extreme analysis saying, oh my God, the market's going to crash, right? Because, those things are kind of funny when you hear like the same people every couple of weeks say that the market's going to crash, right? That's really not a good analysis. But you do want to know when there's a headwind, when there's more headwinds for the equity market, or when there's more of a tailwind, right? And we know that the Fed raising interest rates is a headwind. We know that these short-term and long-term rates going up is a headwind. Usually the dollar moving up is a headwind, right? And of course, this debt nonsense ceiling that they're still negotiating and waiting to the last minute is also, is also to some extent affecting the market, right? So, because again, that just adds to what we refer to as uncertainty in the market. But yeah, I mean, you could see what's going on here. The 2 years up to 4.32, right? And that's higher than these other yields. So, if you bring this up into a chart and we look at, maybe not I guess we could look at the 5-year, you could look at the 1 year, but, we peaked up here, remember, on 3.7, or 3.7 or 3.8, and we hit 5%, and then we kind of sold off hard, but it seems to kind of be regrouping a little bit, right? And we're back up to 4.3. So that's just quick interest rate analysis, in terms of, and again, I just want to show like a little bit of comparison in terms of, this is my watch list that we put together, over the weekend. And, this was really nice in terms of some of the performance in some things, right? And just one day, sometimes the performance could be the whole week. But look at how it looks today, right? And it just shows you, again, the only thing I'm illustrating here is just how quickly, things can change. And here's where I'm kind of getting to the conclusion of this video is that, no, we can't control prices, and we can't control, what this market is going to do on a day-to-day basis. We also, making predictions is really tough, but we can control like how we're going to handle the market and what kind of decisions that we're going to make as the conditions and as that situation changes. So I mean, here's my trading blotter, right? I mean, I was holding 6 or 7 trades, I think, into today, and I'm only holding like, a piece of two pieces of, a couple of those trades, right? So that's just a situation when things change. You have to adapt and kind of get out of trades. Now, lucky, this morning, I was in some trades that were working in the beginning of the day, putting, trailing stop alerts, right? Apple was a name that I hit 2 targets in from a swing trade last week, but it goes back to your cost basis. You're out, and being in DT for a couple days, I took a target in this one, which this one I'm still holding. Shopify, I said, I took 3 targets yesterday in a new trade, and I said, I hope it can continue to go higher, but if it doesn't, I know exactly where to get out of it, right? And so on and so forth. This Carvana was a nice trade for the day. This was a nice winning trade for the day. And I got out of that one 12.50, paid 11.98 this morning. Again, sometimes these short squeezes, which I view a lot of what we're seeing or what we saw towards the end of yesterday and today, sometimes that could be the last leg of a move when you start to see a lot of those names that have high short interest. Once those squeeze, which they did a little bit, sometimes that's the last leg of a move for the time being, right? But that doesn't mean that that's the rally for the year or anything like that, right? We just kind of move in stages. Okay, so that's it. That's how I handled today. Again, as I mentioned in the beginning of the video, like I don't particularly like reversal days, but they happen in the market, right? And it's just one day, and if you make the right decisions, which I'm pretty much almost all the way back into cash, right? Then you can be nimble and flexible and watch how this market kind of develops after a day like this. All right, so that's it, guys. Have patience, right? And just understand that this is a complicated market this year, right? This is not a straightforward, the Fed is expanding the balance sheet, that type of thing. The Fed is still thinking about, raising interest rates. Where are we now in terms of that? And maybe that's the last thing that we talk about, for the next meeting. And we're going to have a bunch of data points. We're going to have a data point up for inflation in a couple days, but they're looking at, there's a 27% chance right now that they raise interest rates, right, for the June meeting. So that's here. So that's notable, right, that it's that high, right? And so here's what we're going to get for the rest of this week. We're going to get the PCE deflator. I think that's the most important data point, right? That's another gauge of inflation. Again, it's the deflator, not the core PCE. In my opinion, it's this one that they look at, right? And the month over month is the important one because that's the new information. So that's what we have for the rest of the week. Thanks, guys, for tuning in. Make sure that you like, subscribe to the video. I appreciate that, and have a great night.